Welcome back. Today, I'm going to go over a article by Redfin, just came out today, as a matter of fact. I'm going to refute any narrative that are reported by Redfin, and I'm going to go over my own personal experience as a real estate investor, whether I agree or disagree with this high level real estate article by Redfin. All right. And at the end of this short video, I'm going to give you some practical solutions and steps as to what some of the real estate investment methodology, which I like really a lot, is on my several decades of investing and helping my students and hundreds of my students and investors over the past few decades to achieve real estate wealth using my income property wealth building strategies. So without further ado, let's go ahead and share my video, go over today's article published on 5 March 2025 by Redfin. The headline is Investor Home Purchases Decline Slightly Nationwide, Drop Significantly in Parts of Florida. All right, so I'm going to share with you what any kind of myth or misconception or inaccurate information that may have portrayed by Redfin. Again, so it'll be a very intriguing. So just hear me out, because I love to dive deeper into any kind of headlines, any kind of data, and really just give people my own unique perspective, because I've been doing it. I've been a real estate investor for so long, for several decades, as I said. Without further ado, let's go with the first paragraph. It says right here, investor activity is declining nationwide due to slow home buying demand, a lackluster rental market, and economic uncertainty and elevated interest rates. Once again, I want to share you that real estate investors are very different in the way we look at things. We look at a small buybacks, small geographical area we focus on. But in our investment philosophy as a real estate investor, whether you're a beginner or not, mom and pop investors out there, you should listen to my perspective. You need to focus on a specific market, on a specific neighborhood. Do your research, do your due diligence. There's no such thing as a national real estate market. Real estate investors are very resilient. We don't care all the variables we cannot control. We buy a property that cash flow in a good area, long-term growth. It give us cash flow, and we ride out the waves. We overcome all the minefield, just invest for the long term, overcome any and all negative factors that we already come across every single day with the social media and all that. That continue. So investor market share is falling too. They bought 17% of homes that sold in the fourth quarter, down from 19% a year earlier. Florida investors are pulling back fastest. I have invested in Florida. I have rental properties in Florida over many years. Again, many of our investors have just several decades. From a high level, I know about Florida. You have to be careful how something that come out of some of these narratives by Redfin or any other resource. Let me go further. Investor purchases of condos. I'm not even going to talk about condos because I never buy condos as an investor for many, many reasons we all know about by now. Let's skip that. So U.S. real estate investors purchased 47,000 homes in the fourth quarter, the lowest level that time, 2016. That's down 3.9% from a year earlier, the biggest decline in a year. It's not that bad. Nationally, year-over-year growth in investor purchases. Look, the way I work with mom and pop investors for middle-class America, a lot of you are watching, but the definition of investor as described by Redfin is encompass various categories. Some investors they do a partnership. It is a group, it's a syndication. Some investors are Wall Street hedge funds, or the black of the world, where they gobble up thousands of new construction homes in a particular Sunbelt market. They buy in massive volume purchase. So you have to understand the word investor is a very general definition of guide. So it just covers various investment categories, investment groups. Be careful the word investor. As you can see, this chart goes all the way down, all the way back to the year 2000, where I started investing, buying income properties across the U.S., cash flow properties in good areas. The early part of 2000, there has been a lot of activities. At least 30% of all home purchase were by investors. Then the housing crash occurred. The global financial crash has occurred back in the 2008. In those few years, as you can see, the home purchases at that time totally crumble. And then in the aftermath of the housing crash, investors slowly are coming back to the market, which is a great time to buy. I would love to tell you stories back in early 2010s, where we can pick up some amazing bargains for foreclosures, REOs, and buying pennies on a dollar. I've been through that cycle. I have taken my investors to purchase during that time, and we made a killing. I kid you not, back in the early 2010s. But then starting around 2015, 2016, from 2016 to 2020, with some investment purchases, it's pretty modest, nothing unique. But by the way, 2020, 13, 14, look at this, like robust investor purchases, more than 60%. In the past 10 years prior to the pandemic, it's been fairly modest investor purchases, around 30%. Then the pandemic housing boom occurred. We all know what happened, right? 2021. Look at 2020, 2021, and the first of 2022. We can see not only investor purchases have skyrocketed due to the historic low interest rate and the bidding wars and whatever, but regular primary home purchases have also skyrocketed as well during the pandemic housing boom. Then the mortgage rate crashed down in the last part of 22 from 3% to 8%. Then we have some total pivot in terms of people buying homes because of high mortgage rates. And then now we bring us to the current situation where we have see some moderation in investor purchases as well. The Redfin says there are several reasons investor activity is declining. Slowing housing market, high home prices, skyrocketing home prices, elevated mortgage rates has really put a dampen on everybody, on owner-occupied buyers, not just investors. And then the second reason for the investor activity declining is demand. Tepid demand. Rents have also plateaued after a boom in apartment construction. But I'm talking about, I focus on single-family home up to a fourplex residential investment, not necessarily apartment, but I need to incorporate apartment into the rent projection. Apartments rents have plateaued in recently because of over construction years ago. Now that means as a result is less lucrative than it used to be for investors to purchase units to rent out in terms of apartment. But I believe single family residential family rental is surging, in my belief, the next few years. So the rent is going to increase quite significantly, of course, but then again, depending on what specific location of the country you're talking about. But I'll talk more about that. Economic uncertainty. We see the headline news everywhere in the social media, the transition of a new presidential administration, the ending inflation, tariffs, job losses, especially recently with the federal government employees being fired. All these highly negative headlines cause us to pull back housing, not just investors, all primary homeowners as well, because of all this negative economic news, political news, and all those factors. Then lastly, elevated interest rate. That's goes without saying right now. The Fed has kept interest rate very high. I know recently, right now, the mortgage rate has decreased to like 6.7% recently, which is real good. It opened up more affordability across the country. So let's see how that's going to play out as we are heading toward the spring housing market, which is usually there's a lot of activity during the spring around March, April, and May. So let's see how the spring market going to play out if the mortgage rate stay at the kind of a low 6.7%, which is amazing. So let me see what else I need to go over. Investor market share is down, but only slightly. I agree, but to a certain extent. I'll dive deeper into it. Real estate investors purchased 17% of U.S. homes that sold in the fourth quarter, almost 1 out of 5 homes nationwide that were purchased by investors. So that tells you that people with wealth, people with money, people have capital, they still believe in housing stock because historically speaking, housing has provided a very high return on the investment. That's how most people build their wealth. Just want to confirm that, validate that. Anyway, investor market share, as we already discussed, it was at the very peak back in 2021 for the reasons I stated. Now it has subsided based on a lot of psychological factors, emotional factors, high interest rate, very hard to cash flow homes these days for investors because of the skyrocketing home price increases recently since the pandemic, and the elevated mortgage rate has caused a lot of investors than normal to pull back and to wait for something better to happen. But I don't have that philosophy. I find the right market, the right deals. I underwrite the good deals in a specific market, and I'll show you some of those strategies and opportunities toward the back end of this video. So stay tuned to hear more about my recap and how I can help people to overcome a lot of this negativity out here. Again, Florida investors are pulling back the fastest. I agree. Because investors, let me see here, the 5 metros where investors' purchases dropped the most in the fourth quarter were in Florida. Yes, I know. Investors' purchase fell 27.5% in Orlando, more than any other major U.S. metro, followed by Chicago, Miami, Atlanta, and West Palm Beach, Florida. So home prices in coastal Florida, by the way, I do not buy income properties in coastal Florida for reasons pretty obvious, because I don't buy condos either, never have, never will, because home prices in coastal Florida, especially condo prices, are dropping amid increasing frequency and intensity of natural disasters and soaring HOA fees and insurance costs. Investors looking to sell for a profit would have a lot of competition with Florida for sale inventory at a record high. Again, I pretty much agree in terms of Florida. My students and my investors, they buy into strategic locations away from the hurricane, away from the flood zone, new constructions in the inland of Florida, mainly in the central Florida. On the other end of the spectrum, a Bay Area, where I lived for many decades, features heavily on the list of places where investor purchases and invest market share most. In Seattle, bought 33.8% more homes than a year ago for investors. San Jose, 21% more investor purchases. Oakland, 19.4%. San Francisco, 19.1%. Detroit, 15.5%. This is boggling. I don't know who's buying. Investors are buying in the Bay Area where I live for many years. I never buy. I buy primary homes to live in the Bay Area, which I have done several times over the years, but I would never buy investment properties, which is the median price of a Bay Area home is like 1.5 to 2 million. I'm not going to buy. That number doesn't work. You can't cash flow as an investor. You buy a $1.5 million home, you put 25% down payment, and the rent is like $3,500. Do the math, right? Your monthly negative cash flow is like $3,000. I know. I'm probably surmising that those investors that buy the increasing buy activity in a high-cost area such as the Bay Area, LA, or Pacific Northwest, they are doing partnership. They have like 5 or 10 partners. They pool their money together to buy these expensive homes, perhaps to flip. I don't know. Maybe doing a syndication, some kind of partnership. Group investors pool the money because each housing in California is so expensive. I, as a turnkey mom and pop real estate investor, and many of my investors are mainly from California, we don't buy in California. We buy out of state with a low cost, low affordability, higher cash flow in the growth markets. I'll give you those information momentarily. Let me finish the Redfin article. So investor purchases of condo dropped to the lowest in 12 years. And then any investors or primary homeowners that have purchased condos not only Florida, in anywhere in the country, they're going to crash and burn because the surge in HOA fees caused by natural disasters. So no surprise that the condo investors are crashing and burn, especially in Florida, as you can see by these statistics. It says right here, investor purchases of single-family homes fell only 1.6% year over year. So that tells me in Florida, single-family homes, especially newer constructions, has been very good, has been stabilized. They have not corrected. It's all about specific asset classes. Condos are a different real estate asset class. Single-family homes is another different asset class. Apartments and multi-units are different asset class. It's all about what asset class you're pursuing and what location you're buying in those assets. That's all the key. That's how investors think. Most investors purchase our single-family homes. Of course, this is the lowest risk with a higher profit potential, especially you invest for the long term. So nearly 7 in 10, almost 70% of properties were investors bought in the fourth quarter were single family homes. That's my metric. That's my business model. While only less than 18% were of investor purchases were condos, and 7.5% were townhomes, and 5.6% were multi-family properties. So risk investors to scoop up 32% of multi-family properties. That's understandable because when you buy multi-families like duplex or fourplex or beyond fourplex, investors look for cash flow. They look for high cap rates so they can earn the cash flow. So that's understandable. Investors' purchase of low price homes are holding up. Of course, that's the key. You have to buy the lowest price homes below the median price of a specific location, so you can have the rent can match up with the low purchase price. That's how you cash flow with 25% down payment. So that's pretty much, I think that's my target area, to low price, newer construction homes in the growth markets in the South and Southeast, and you put 20 to 25% down payment, and you will cash flow. Again, cash flow is by no means is the only way to make money, because income property is a multi-dimensional asset class. You make money beyond cash flow. You make money with long-term appreciation. You make money with amazing tax benefits. You make money with the renters going to pay down your loan for you. You make money with inflation, long-term growth, equity growth, and rental increases over time. So 5 ways, even more than 5 ways to make money with income property. So the mortgage rate, 7%, doesn't affect me and never has, because when we target specific properties, we get some great deals. We underwrite great deals because the seller, the builder, is going to buy down the rates for us, so we can get a much lower 30-year fixed rate mortgage at like 3.75% to 5.75% instead of 7.5%. If you were an investor, if you buying an investment property without any kind of a deal, without any kind of negotiation, without any kind of incentive from the seller, from the builder. So again, that's you got to know what you're doing. Buying low-level homes is the key to you buying more affordable homes in a fast-growing market. All right. So the takeaway with this particular article, yes, the investors' purchases has subsided, not a dramatic reduction, in a little bit lower, which is understandable, because especially when investors, they don't do the underwriting, they don't know where to find the right market, and they are scared away by all this negative information, higher mortgage rate, elevated home prices, and inflation, and political instability, federal job losses. All this negativity just bombard their head with the negative media, scaring off a lot of investors, not just investors, primary homeowners as well, are staying in the sideline. So you got to, as investors, you got to find a deal. So as a matter of fact, so I'm conclude this video with some of the deals that we target. We target builders and sellers in the fast-growing markets in the country, and I'll give you a real quick sample. Some of the property we target in very high growth markets with good population growth, good job growth, with very low level homes, new construction with a very low price. We negotiate with the builder for a discount. We just got some great deals. Just with this nice, fast-growing path of growth in the suburbs of major metros. Started out, we have in Texas, you look at this great homes. If they were all cash flow with 20 to 25% down payment, we get a builder incentive, and they lower our mortgage rate with a rate buy down. A lot of builders are providing first-year property management for free, and then they pay 2% of the closing costs. And so by buying down the rate, by having lower mortgage rate, we achieve higher cash flow, as you can see. And we buy the great deals, like, for example, in Oklahoma, look at this new construction. You would never see anywhere in the country. You can buy new constructions in fast-growing area. In this particular Oklahoma suburb, off-market properties for only about $150,000. And at 20% down, you will achieve very good cash flow monthly, as you can see right here. And duplex, where can you find duplex for $320K in Oklahoma with high cash flow with 25% down payment, and in different sub-markets in Oklahoma, and also in South Texas, you can buy new construction for $549K. How cool is that? High cash flow, fast-growing market, a lot of long-term growth. In Alabama, same thing. So I'm not going any further. In Florida, we have, fast forward, we have all these great off-market deals. We negotiate with some national builders. We get a below-market discount, great deals. We underwrite some good deals, all the incentive. Even in Florida, we got some great strategic markets in the central Florida. Great deals, great cash flow. In Central Texas also. Central Texas, a suburb of Austin. And that's all I have to say. So if you want to learn more about our investment methodologies, please, on my website below, just put your email on there so you can become a free member of our network. So you'll receive great weekly content about real estate investment opportunities, to learn more about real estate education and the housing market, what have you. And finally, if you receive any value whatsoever from this video, please like and subscribe to my channel, and comment below. What do you think about, if you're investors, share your thoughts or your comment below. What do you think about the things I discussed, the Redfin articles? Do you feel that the investors should stay on the sidelines and waiting for better opportunities, or you pull the trigger and just stay the course, buy cash flow properties based on the underwriting deals that I share with you? Or do you like my idea? And if you don't, share with me why, if you're an investor. If not, if you want to be an investor, let me know. What do you think? Would you pull the trigger under this current economic, political environment? I would, because when you buy for the long term, you just get the cash flow and ride out the storm. Because eventually, if you invest for a long term, 7 to 10 years, real estate will always make money, always achieve long-term appreciation. All right. So that's all I have to say. Thank you so much for watching, and I'll see you very shortly next time. Have a nice day. Bye-bye.